A lot of folks find the financial analysis section to be the most difficult part of their business plan. It doesn't have to be that way. Let me explain why. All you're trying to communicate in your financial analysis is how much money you will need for the business, how much you'll be able to generate from sales, what expenses you'll incur, and how you'll apply the money you have to build the business looking into the future. So for an outsider, looking at the financial analysis section should really give them a strong sense as to the viability and the potential profitability of that business. And this section is absolutely critical if you're looking to raise capital from investors. This section needs to be well structured and it needs to be in depth. So you may want to get some assistance from an accountant or someone experienced in finance to help you. As a minimum, you need to include the following sections in your financial analysis. An income statement showing the revenue, the expenditure, the profit or loss incurred by the business. A balance sheet, and that really reflects your assets, the liabilities, the shareholder equity contributions to that business. A cash flow statement reflecting actual cash received versus actual cash paid out. And that's going to be across three categories: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. I would also recommend including an operating budget with a very explicit breakdown in terms of when you expect to break even. So indicate what your break-even analysis will be and what the key operational milestones that have to be reached in order for the company to break even, meet all its expenses, and in effect become sustainable. For all of these financial reports, I would recommend showing the last 2 years' figures, if you have them, and a forecast for at least the next 3 years. That gives the reader a sense of where you've come from and where you're heading financially. This is not the time to go into the detail on financial statements. If you need to learn more, check out the excellent finance and accounting module on Mr. Mac. We've even customized these modules for specific industries like retail or mining or even technology companies. Especially when it comes to your forecasts, you're going to have to make certain assumptions. Make sure that these assumptions are reasonable, make sure they're well researched, and that they're aligned to other parts of your business plan. You don't want to appear clumsy and unprofessional by having conflicts in terms of your assumptions and the rest of your business plan. Be explicit about these assumptions and state them up front in your financial analysis so readers understand your reasoning. Because the financial analysis plan will include so much granular detail, you may want to use graphs and charts to illustrate and distill the key financial messages as visuals. The final and critical factor in your financial analysis of your business plan is a basic hygiene factor. Double and triple check all your calculations and figures in your financial reports. Get a third person to do it as well. Arithmetic errors in your financial analysis are what I call schoolboy errors. And no serious investor or partner wants to do business where there are schoolboy errors in the financial analysis. It makes you look unprofessional, careless, and clumsy. And as I said earlier, when it comes to the assumptions you've made, make sure you can substantiate them.